Hello there. Welcome back to Grade 10 Economics. In this video, we want to look at an essay question that is our question 5 on this question paper, and it's on macroeconomics. So this is a question paper of March 2024. We are going to look at question 5, and the question has got 40 marks. And it requires you to spend average 40 minutes on this question. So we've got our first part, which is to discuss in details the role of markets in the circular flow of an economy, and it is at 26 marks. And then the second part is saying how can the government contribute positively to the economy, and it's got 10 marks. So all the additional parts, we see that the additional part is represented on this second point. This is what we have, and then we are going to go through the main body will be concentrated on the first point, which is discussing details for the role of markets in the circular flow of an open economy. So remember, this is an essay question. Obviously, it has to go with the format that we are going to start with your introduction, then go to the main body, and in the main body, we are also going to have an additional part whereby you are going to concentrate on the second point. And then lastly, you are supposed to have your conclusion. So basically, in terms of the requirements of the introduction, we have the instructions in terms of the introduction here, which reads a good starting point, and that is the first hit that we have in terms of constructing your introduction. A good starting point would be to define the main concept related to the question topic. So the main concept, obviously, we are going to look at the question, and then you try to pick any terms that are there in the question. It might be one or two terms that we are having in the question that we can pick and define in the introduction. So you go to second point, say do not include any part of the question in your introduction. Very important to take note. So you don't have to repeat the any part that is that is stated in the introduction. So that is stated in the question in the introduction. So that's basically what the point is trying to illustrate. Then you go to the second point. Do not include any part of the introduction in your body. So what you have written in the introduction should not be also included in the main body. So we have that explained, and then we go to the last point. Avoid saying in the introduction what you are going to discuss in the body. So you are not going to preempt whatever you're going to mention in the main body in the introduction. So that's the instruction that we have. But obviously, you have to take note that we only have 2 marks representing our introduction. So basically, according to the instructions that we are given, our introduction that we have, in particular within the context of this video, we have an introduction that is defining the terms that we are having in the question. So we go back to the question and try to pick those terms that we have. And remember, this is our question, but if you look at the question, you would see that we have a term circular flow that we are having here. So this is the one that you are just simply going to define in the introduction. And also, if you go on the second part, still on the first point, we also have a term which is there, which is saying open economy. So those are the 2 terms that we are going to define according to our introduction of this essay. So we'll start by circular flow. So on the definition of circular flow, it's a simplified representation of the interaction between the participants of the economy. So basically, that's the definition that we have. So that's only what you are going to state in the introduction by defining circular flow, by saying a simplified representation of the interaction between the participants of the economy. And also, you see that we also have open economy. So the definition that we have in terms of open economy is that this is an economy in which both domestic and international entities participate in the trade of goods and services. So basically, when we have an economy that is exchanging goods and services with other countries, it's an open economy. You know that when it's a closed economy, we don't have any exchange that is taking place with outside parties which are outside the country. It's only it will be only domestic trade whereby the exchange is only inside the country. So basically, that's what we have. So we go to our introduction, try to see the introduction that we have for this video. We go there and see that this is our introduction. And we are seeing that on the first part, we are now using a definition of the markets. We are seeing that they are defining a market. So markets are coordinate economic activities and determine prices for goods and services. So you see that we also have markets in the question. So that's another term that you can also define. So we have a definition of market. So we go and see that on the second point is not defining circular flow. circular flow model is a simplified representation of the interaction between the participants of the economy. So those are the two terms that have been defined. So you can just choose the ones that you can define. You can also define open economy within the context of the definition that we have just given. So this is how we come up with the introduction. Then going to our main board now. Our question is saying discuss in detail the role of markets in the circular flow of an open economy. So the role of markets, that's where we have got our main term that we have there. So you see that we have got a different markets that we have. Remember, the different markets that we can include there. We can have the product market. We can also have the factor market. We can have the money market. We can also have the foreign exchange market. So those are the typical markets that we are going to include in the main body. We are going to look at them. We are going to explain on them and discuss on those markets. So on the first part, we have got the product market, which is also called the goods market or the output market. So on the first point, these are markets for consumer goods and services. So you see that it includes the goods and services. So in economics, a distinction is made between goods and services, but basically the distinction is very clear. The goods are tangible and then services are intangible. So basically, that's the basic differentiation that we can give. So next point is saying goods are defined as any tangible items such as food, clothing, and cars that satisfy some human wants or need. So basically, tangible, something that you can touch. And that's exactly the explanation that we can give. The next point is saying buying and selling of goods that are produced in markets include capital goods market for trading of buildings and machinery. And then we go to the next point saying consumer goods market for trading of durable consumer goods, semi-durable consumer goods and non-durable consumer goods. Then we go to the next point. Services are identified as non-tangible actions. So basically, remember we're saying services are intangible, so are not tangible. So it means that they are non-tangible. Non-tangible actions include wholesale and retail, transport and financial markets. So basically, remember, if you talk about transport service, it's something that we cannot see or touch, but it comes in the form of a service, so it's a non-tangible. Then we go to last point, flows of private and public goods and services are real flows, and they are accompanied by counter flows of expenditures and taxes on the product market. So those are the explanations that we have in terms of the product market. Then we go to the next type of market that we have, which is now the factor market, or we can call it the resource market there, or the input market. That's meaning the same thing. So basically, now you are going to see that that's where we are going to see the exchange of factors of production. Remember all the factors of production, we've got land, labor capital, and entrepreneurship. So we are going to see that the factors of production are going to be provided, and then we are also going to see factor incomes coming, exchanging hands. For example, we've got labor. The workers will provide labor, and then obviously the firms or the companies are going to pay the workers in the form of salaries and wages. So basically, that's the movement that we see. So on the first part, saying factors of production are bought and sold in the factor market. The factor market includes the labor, property, and financial markets. So our factor services are real flows. So you see that also we have got two types of flows that we have, whereby we are having real flows and the money flows. So real flows is described with goods and services. So factor services are real flows, and they are accompanied by counter flows of income on the factor market. So this is the explanation that we have in terms of the factor markets, or we can call it the resource market, or we call it the input market. So basically, we go now to this next type of market that we have, which is the money market. So in the money market, explanation that we have is in the money market, short-term loans and very short-term funds, which is less than 3 years, are saved and borrowed by consumers and business enterprise. So the period that we are having there makes a differentiation in terms of money market and capital market. So on money markets, we are saying less than 3 years, which means that if you take a loan that we are going to repay within a period of less than 3 years, is the one that we classify as a money market. So obviously, when it becomes more than 3 years, it's going to go under the capital market. So on the next point, other money markets, products sold in this market are bank debentures, treasury bills, and government bonds. So these are just marketable securities that we have. marketable securities that are obviously going to mature within a period of less than 3 years. Then we've got the last point exchange, the South African Reserve Bank, which is SARB, is the key institution in the money market. So the central bank, which is the SARB within the context of the South African economy, is the one which facilitates transactions in the money market. So that's basically what we have. Then we go to the next part of our markets, where we're in the capital market. So in the capital market, long-term funds with 3 years which are 3 years or longer are borrowed and saved by consumers and business enterprises. We have got the Johannesburg Security Exchange is a key institution in the capital market. Last point is saying products sold in this market are mortgage bonds and shares. Then this is the explanation that we have on capital markets. Then I will go on to the foreign exchange market. So obviously, this is going to overlap within the context of our domestic economy to the foreign economy. That is the markets of other countries. So we go there and try to see on the first point saying on the foreign exchange market, businesses buy or sell foreign currencies to pay for imported goods and services. So it's going to involve the issue of imports and exports. So in this case, on the first point is mainly highlighting the issue of imports, whereby we buy goods and services outside the country and then we pay our currencies. Then we go to the next one. This transactions occur in banks and consist of an electronic money transfer from one account to the other. Then next one is saying the most important foreign exchange market are in London or New York or Tokyo. So basically, the foreign exchange that we have there, the popular foreign exchange markets that we have are in London, New York, or Tokyo. Then we go to the next point. The South African rand is traded freely in these markets when a person buys travelers checks to travel abroad. So we are seeing that the explanation that we are seeing under the foreign exchange market is mainly centered around the issue of foreign currency. So obviously, there is an issue of the demand and supply of foreign currency. Remember, the foreign exchange market is the market that we are going to see the forces of supply and demand of foreign currency are taking place. So if you go to the next point, saying imports and exports are real flows, and they are accompanied by counter flows of expenditure and revenue in the foreign exchange market. So any other relevant correct answer also can be correct according to what we are given. If you can provide any other explanation that is within the context of the foreign exchange markets can be also marked correct. So we are now on the additional part. So additional part, remember, we are saying it reads how can the government contribute positively to the economy. So remember, we are going to see that a government is also one of the key parties that participates in the economy. We have got firms as one of the participants in the economy. We also have households being participants in the economy, but the government also is also a participant in the economy. So how can it contribute to the economy? So it can easily contribute to the economy because it's interlinked with other participants that are there in the economy. Remember, the government is going to tax the households and the firms through the fiscal policy, whereby there are different forms of taxation that are there. There's VAT, which is charged on consumer goods and services. There's income tax. So through that taxation, they collect the revenue. You are going to see that they are going to redistribute that income that they collect through taxation to the marginalized groups in the economy through grants. So basically, the redistribution process explains also how government can contribute, and it can also contribute through the issue of issuance of subsidies, whereby they assist firms or companies that are facing high cost of production. So within the context of that, we can see how the government is contributing positively to the economy. So through the subsidies, we are going to see that firms are going to face less cost of production. So they are left with more money to expand their production. They expand their production capacities. We are going to see a positive in the economy in terms of economic growth. As economic activity increases, more goods and services are going to be produced. So basically, those are some of the macroeconomic positives that we can deduce from those scenarios. So on the first part is saying government can contribute to the economy by buying the factors of production from the household, which results in improved welfare of citizens. So the government also buys factors of production from the households. How do they buy? Remember, the households represents the citizens that are there in the country. They provide the government with labor. So when they provide labor, that's when the government is now buying the factors of production in the form of labor from households. and then the households will receive salaries and wages. And obviously, through that now, that's when we are going to see an improvement in terms of their welfare now. Because they can now afford to buy goods and services, their standard of living is enhanced, that becomes a positive. So this is what we have on the first point. Second point is saying buy products from the goods market and give that as a public goods to poor people. So this is an aspect of redistribution of income, whereby they are saying buy goods from the goods market and give that as public goods to poor people. So basically, they are buying the good from the goods market, and then they redistribute those goods to the public to poor people. So basically, that's the concept that we have. Remember, the essence of redistribution is to try to close the gap between the rich and the poor, whereby you take income from the rich and then you give it to the poor. So let's collect money from households and businesses to be used for infrastructure development. So the collection of money from households and businesses is through the instrument of taxation, whereby they tax the households and businesses, and then they use that income that they collect through the infrastructure of development. So basically, that's what we have. And the next point is saying supporting households by grants can increase consumption of consumer goods, allowing more profits to businesses. So basically, this explanation again is revolving around the aspect of redistribution of income, whereby money is taken from the households and firms through taxation, and then it's then redistributed to. We are seeing that it's then redistributed through grants. And this can increase consumption of consumer goods. When the citizens receive those grants, they're going to buy more goods and services. And obviously, business will earn more profits. So it's interlinked. You are going to see more positives coming out. Unemployment is going to be reduced. We are going to see economic activity increasing as businesses are now earning more, so they expand their production capacities. So basically, that's what we have on this point. We go to the next point, which reads giving financial assistance to local firms to boost exports of local production. This is just the essence of the explanation that we have, that economic activity increase. When it decreases, more possibility to export. So that's what we have. Then lastly, attracting more foreign firms that will lead to industrialization in the country. So obviously, when we attract more foreign firms, that's when we are going to notice foreign direct investment transferring in our local economy. And obviously, the positive that you can also deduce from there is that there will be industrialization, whereby you're seeing more economic activity that is transferring maybe in the manufacturing industry. That's mainly the essence that we have. So this is the last point that we have. So finally, we've finish the additional part. So obviously, after the additional part, we are going to go to the conclusion. So we are going to go back and try to see what are the requirements that we have in terms of the conclusion. The conclusion is here, and also take note that it is only as 2 marks. And then first point is saying any high order conclusion should include. So these are the certain aspects that you can include in terms of the conclusion. A brief summary of what has happened that has been discussed without repeating facts already mentioned. So do not repeat facts that has already been mentioned. Very important to take note. The second point is that any opinion of value judgment on the facts discussed. That's what you should take into consideration. Then additional support information to strengthen the discussion. So this is the main common one, that you can give additional support information to strengthen the discussion that has been discussed. So this is coming in the form of maybe a recommendation in terms of what we have been. If you were coming up with solutions, what other solutions can we add on? You can just include in your conclusion. Then you can also come up with a contradictory viewpoint with motivation if you are required. And then, but this one we have to take note that a contradictory viewpoint should only be raised if required. So lastly, these are just recommendations that we can give in terms of what other ways can we put down it according to the problem question that we have been discussing in the main body. So basically, we are saying out of these ticked points, you can just choose one that you can go with in the introduction, in the conclusion, so that you can conclude your essay. So basically, that's what we have, guys, according to this video. Let's not forget to subscribe and share to our channel. Let's share the link to our colleagues who are doing grade 10 economics. More typical examination questions in terms of the March exam are going to be uploaded on this channel. So let's stay tuned. Let's turn on the notification button so that when we upload the new videos, you get notified. As for this video, I'm signing out. Let's meet again in the next video.